Welcome to Global Tax Talk. I'm Nangel Kwong. I'm here in London today, and I'm delighted to be joined by Andy Wiggins, PwC's Global Tax Accounting Services Leader and the ESG Tax Reporting Lead for PwC UK. Welcome, Andy.
Thanks, Nangel.
So we're going to focus our discussion today on public country-by-country reporting and broader tax transparency trends that may have a significant impact on companies. So firstly, Andy, let's talk about the current state of play. Would you please describe the spectrum of tax transparency regimes around the world that are attracting companies' attention, both voluntary and mandatory, public and non-public?
Sure. So if I start with mandatory, first of all, there's a lot of activity in this space at the moment. So we've got within the EU and Australia, they're introducing EU public country-by-country reporting. So this is public disclosure of revenue, profits, tax paid, employees, quite a lot of data. And that's for companies that are larger than 750 million euros. And there's an equivalent Australian dollar value. And it will be for data in relation to 2025, published in 2026. But there are a few exceptions. There are Romania, who has gone early, so that was 2023 data in 2024. And then there's also Bulgaria and Croatia, who are 2024 data published in 25. Overall, if you include both Australia and the EU, it's 70 countries' information that will now need to be disclosed. Then the second area is in sustainability and CSRD across Europe, the Corporate Sustainability Reporting Directive. For EU territories, headquartered territories, they've already had to disclose. There may be some tax disclosures within there. There's very likely to have some knock-on impacts around business model disclosure and everything else that companies need to think about. And then there are other sustainability related standards that are coming down the line that will be mandatory as well. And then for US groups who report under US GAAP this year, so for 2025 data, are going to have to break down some geographical splits of their information around the rate rec, around tax payments for their largest countries. So lots happening in the mandatory space. From a voluntary perspective, this has been a process over a really long period of time. We've got a number of standards out there. Mainly, the main sort of voluntary standard is GRI, Global Reporting Initiative, get my words out. And in that, there's an actual tax standard, GRI 207, and that requires, guess what, country-by-country reporting, as well as some other information around tax strategies and approach to tax. So that's the main one. We've seen in UK in particular, and somewhere around Europe, total tax contribution, so a broader concept rather than just corporate income taxes, so incorporating all of the taxes that companies bear. And then what we've also done from a PwC perspective is have a look at what information is available publicly. So we released last year for the first time a global study covering just under 900 companies across 21 countries and also 6 industries, data comparing tax information that's readily available. So there's lots of information publicly available today.
Fantastic. Thanks, Andy. And we'll also include a link to that report you mentioned.
Brilliant.
My second question is, what does tax transparency look like in practice right now? And how are companies dealing with these regimes? How are they getting their boards comfortable with the notion of voluntary disclosures?
Yeah, and it's really interesting. You've got quite a spectrum of where companies sit. You've got some, especially in Europe, who are sort of adopting a lot more voluntary sort of disclosures. What we've learned from Europe is that getting everybody internally as well as your stakeholders takes a really long time just because you want to be comfortable with the data, you want to make sure that everybody's comfortable with the granularity of information that you're actually going to be publishing. What's the narrative that sits alongside it? That's quite a difficult one. And so it's not just about that. It's then saying, well, how does that align with stuff that's already published? So you'll have your financial statements, you'll have whatever it is that you're disclosing. That's quite hard to align all those things together. What we are starting to see is US groups now making some voluntary disclosures. Some of the largest companies in the US now have tax transparency or economic contribution reports, which again is important that we start to see some clear messaging around how tax impacts, wider society. It is an important element of contribution. It's how governments are funded, obviously. And so therefore, we do need to be clear on what those key messages are from companies.
Thanks, Andy. And my final question is, where do companies go from here? What trends are you seeing, and why is it important for companies to be thinking about their total tax contribution and sustainability messaging now?
There's a huge pipeline of mandatory requirements coming down the line. And of course, that is going to mean that companies need to give some serious thought as to, am I going to give a base level of information? Do I just follow the rules and give the data and allow somebody else to interpret that data on my behalf? Or will I give more data than I need to, i.e. above and beyond voluntary data? So rather than just the countries prescribed in EU CBCR, should I disclose everything? Do I need some narrative that sits alongside that? Well, that's, again, as we've just said, really quite hard, and you've got to get all your stakeholders on board with doing that. That takes some time. A lot of these deadlines, assuming you're not in Romania, are coming up. And so therefore, there's lots and lots of decisions to be made. You've also got this sort of extra piece around all this sustainability reporting that is happening, and how does the information that you're giving align with that, as well as the financial reporting. So if you're a US group, you're going to be disclosing this incremental information around country by country reporting in your financial statements. Adding all of that together is really, really difficult. And it always takes longer than you expect. And then the final reason, which is sort of no conversation is complete without talking about generative AI. With all this increased information publicly available, people will start using AI to start analyzing it and doing data analytics that you haven't been able to do before, comparing companies, contrasting, spotting outliers, all those things. It's just going to be all readily available for people to look at.
Thanks so much for joining us today, Andy, and sharing your insights with us. And thank you for joining us. Please come back next time so that you stay global tax ready.